Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for a double 1, 2, 3, 4, 5 to the upside to finish green 3, then 4 and another 5 to the upside. Currently we're working on this blue 4 over here where the common retracement targets for a wave 4 are between the 236 and the 0.5 Fibonacci taken from the low of 2 to the high of 3, which is between 35.3k and 32.2k. And you can see the 0.236 has already been hit, which is nice to see. Another good thing to know is that a wave 4 in blue of a higher degree likes to retrace to the wave 4 of a lower degree, which is this range over here, as inside this wave 3 we are counting a 1, 2, 3, 4, 5. So preferably wave 4 retraces to maximum this range over here, meaning the 236 to a maximum target of the 382, with the 382 sitting at 33.6k. You also see the vertical lines that I have on the chart. These are Fib times comparing this wave 2 in time with the wave 4 in time. Most commonly, wave 4 is longer in time than wave 2, which is currently also the case as the price action locally is still corrective and this 1-to-1 has already been passed, as you can see. A less common target or almost close to invalidation for a wave 4 is the 3 Fib time over here, when wave 4 is becoming 3 times longer than this wave 2, with the 3 Fib time sitting on the 6th of December. And for me, usually an invalidation of a wave 4 and an impulse would be the 4 Fib time over here, which is sitting on the 15th of December. Another invalidation would be for price to move to the downside without taking the double top or triple top even, to reach the golden pocket, the 0.618 down here at 30.9k. If we look at the bearish scenario, we're also still expecting this triple top over here to be taken for another wave 5, currently also still working on a wave 4. It hit the 0.236, so also in this scenario that is all the same. The main difference here is the length of this wave 2. Instead of this being a wave 2 in a 1-2-1-2, we now have this whole section here as a wave 2, meaning that preferably this wave 4 is longer again than wave 2, meaning longer than the 1-to-1, which is sitting on the 1st of December this year. After the low of 4 is made, or at least the corrective structure is finished, because in a potential triangle the low could already be in, we are then looking for a wave 5 to the upside, where currently the most common target for wave 5 is between the 1.618 and the 1.236, taken from the high to the low over here, which is between 38.7k and 39.9k, basically 40k. And we have some interesting resistance above price as well, which is good to know. First of all, the golden target box, we've been talking about it for a while now, 38.5 to 39k, and then also the blue box here, 39.3 to 39.7k. If we then zoom in to the 1 hour time frame, then I did my triangle video this morning, and there were 2 triangles with a similar price action as a result that are basically the higher probability scenarios, and these are the 2 I like to show you. First of all, we have over here the WXY or ABC structure, where we are waiting for B or X to finish, wave E of the triangle, and then we are looking for a move to the downside, very likely for a new low to grab the liquidity before a move to the upside. Wave C should be an impulse to the downside in an ABC regular flat, and then you expect continuation to the upside, where of course the 382 preferably is a maximum target here, right, for a wave C or potentially a wave Y. And for a wave Y, we want to see a flat structure or another triangle and then continue towards the upside. But most important is that we're looking for an E, which preferably is a nice zigzag structure, 3-wave structure to the upside, where also locally we do have resistance above where price is at the moment. First of all, the blue box, 36.9k to 37.1k, and then another blue box here, 37.4 to 37.6k. You also see 2 invalidations. If price keeps pushing to the upside, then a triangle like this is invalidated because E is not allowed to finish above C. And if price would currently do this, then, well, it's currently not really a great probability. This is an ABC, so, you know, I'm not confident this is the high of E. And if price goes down, I prefer to look for other scenarios. The second triangle gives us the same result for price action, meaning a move up and then a move down. But here you are not taking the low of C because you're forming an E and then continue to the upside. While in the other scenario, you will also move up, but then the move down could take the low of this low over here, which is in this case labeled a D wave, right? So in this particular scenario, we have a W, X, and a Y. W zigzag, X zigzag, and then Y is a triangle A, B, C, D, E, with C over here being a complex structure, double zigzag in a W, X, Y to the downside. We over here have a nice higher low, right? Just as well as over here, we have a lower high. That's what we like to see for a triangle. And then we're looking for this wave D. Same as the other scenario, you don't want to see this high broken for the high of a D because that would invalidate wave D. We're also looking for a simple zigzag over here. Then we're looking for a wave E where the low of C is not allowed to be broken because in this case, we are looking for price to continue to the upside. If we look at the range so far, then we have moved above the point of control and also filled the 2-hour gap, which I'll show you in a second. But over here, we are currently on top of the point of control. Support resistance is down here with the value area low sitting at about 36.1, 36.2K. And the area of resistance, if we talk about range trading over here, right? Area of resistance is this white box with the value area high of this range, the volume profile, sitting at 37.4K. If we look at the 2-hour gap mentioned this morning as well, we got a very, very nice rejection. So as mentioned, the moment you close candles inside the gap, probabilities are high to close the gap and fill the gap, and basically move to the upside. Move to the upside, hit the top of the gap for a nice rejection to the point of control as you've just seen. So the gap has been filled and can now be removed from my folders over here. And if we then go to the lower time frames on the 15-minute, then over here, we could have a potential 5-wave move to the upside finished if we are thinking about a zigzag, right? In a triangle, we're looking for an A, B, C, and in a most bullish scenario, you're then looking for 1, 2, 3 and continuation, where you're going to take that double top at 38K. In this scenario, we're then counting a 1, 2, 3 sideways range and then a wave 4 to the upside, where we're then looking for a move to the downside in a wave 2 or B, which can be any corrective structure. However, in a wave 2, a triangle is not allowed, which is allowed in a wave B. But, it's way too early to call a triangle. At the moment, we're moving down like this, and we could have flats, we could have zigzags, right? We have to wait and see. But what is important for a 2 or B is that for a wave B, the most common target area is the 382 to the 886, which is of course a big area, but we do see that around the 0.5 and golden pocket area, we have this white box over here, and this white box is a support resistance area, right, where over here the box is sitting between 36.1K and 36.2K. So a little bit of additional confluence around this area over here, which is nice. And for a wave 2, the most common target area is the 05 to the 786. Now the price 302, 36.3K, and the 886 all the way 35.7K, and the 05, 36.2, 786, 35.9K. If we look at the more bearish scenario, then we're looking again for this to be some sort of an ABC to the upside, which at the moment is difficult to count and has a lower probability, as then you have to count this as an AB, and this is then a wave C. However, we can't really count this as a diagonal over here, or it's going to be an expanding end to a wave C, which is very rare. So this is at the moment not the preferred scenario. Of course, we always have to keep an eye on proof of support and resistance. Over here, proof of support. If price comes down, we want to see strength, right? Like RSI, stochastic, CVD, market structure change, volume, candlestick patterns, whatever it is that you are looking for, whatever the entry requirements are for you to enter a position. And the same with resistance, right? If we're looking for a big wave C somehow and a move to the downside, we don't want to see proof of support. We want to see a dump, but currently lower probability as we are looking for higher prices to come. If we look at the CVD divergences, we had bullish CVD divergences here, which was, by the way, in confluence with the retest of the point of control. So price moved to the upside, came back down on top of the point of control. Bullish CVD divergences also entered this very small 15-minute gap, and then we had that move to the upside to fill the 2-hour gap that we had as well. Currently, of course, again on top of the point of control. If we look at the CVD divergences at the moment, quickly refresh over here, then you can see we do have some bullish CVD divergences again, higher lows on price, lower lows on the CVD over here. But this is now the second time that price is forming the same type of bullish CVD divergence, so brings a little bit more risk. This was the nicer one over here, but you are on top of the point of control. You know, observing the reaction is always a good idea. Look for other confluences, but this is now the second time that the low has bullish CVDs with this structure over here. And generally, the more often you have a CVD divergence with a same pivot, the lower the probabilities of it playing out. So it's a little bit more risky. If we then look at the probabilities of these different scenarios, then on the medium time frame, we are looking for the box. First of all, on a medium time frame, currently as it stands, the bullish scenario has a higher probability of playing out, meaning we're looking for a 4-5-4-5, right? Depending on how long this structure is going to be, we're going to change this to the more bearish scenario, where we're still looking for a 4 and a 5 before then a correction. But in general, we're looking for the stops to be taken before any bigger corrective structure to the downside. On the low time frame, at the moment, I ride a neutral, but actually when we look at the different structures over here, including CVD, this is at the moment the higher probability scenario for me between the two triangles. Main reason is because of the bullish CVD divergences that continue to build over here in this range. We have over here bullish CVD between A and C, bullish CVD, and I can imagine if we come down again, we might form more bullish CVD divergences, and that's exactly what you like to see in a triangle as well. So this is probably at the moment, probability wise, the higher probability scenario for me compared to this triangle, where you could potentially take the lows. And on the micro, currently the bullish scenario, where we're looking for an ABC to the upside, potentially even more bullish, but that is wait and see, as the highest probability scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.